It was only 10 months ago that we saw Tesla pledge their support to cryptocurrency as they announced their $1.5 billion investment into Bitcoin. And now, just last week, we're seeing Warren Buffett's right-hand man, Charlie Munger, say this about Bitcoin. Of course I hate the Bitcoin success. I wish they'd never been invented. Believe me, the people who are getting into cryptocurrencies are not thinking about the customer. They're thinking about themselves. Just look at them. I wouldn't want any of them to marry into my family. The Chinese made the correct decision, which was to just simply ban them. It's definitely clear at this point that not everyone has the same point of view when it comes to crypto. And to be honest, when looking at a company or an individual and their sentiment towards a particular investment, there are always going to be differences of opinion, especially in a market as new and as volatile as this. However, whether you're looking at investors like Charlie and Warren, who have remained skeptical at best, whether you're looking at Social Capital founder and CEO, Chamath Palihapitiya, who has remained optimistic from the beginning, or my personal favorite, someone like Kevin O'Leary, who's actually had a change of heart, hearing experienced investors talk about their views on crypto does introduce points that I know I would have missed out on if it hadn't been pointed out to me. So with that in mind, today I thought I would document my own learning experience, where we go through the different viewpoints of famous investors and how they feel about crypto assets. Now, just before we go on to the first investor, as you can see, less than 15% of our viewers are actually subscribed. So if you wouldn't mind just taking 1 second to go down and gently tap that subscribe button, as you can imagine, we would obviously really appreciate that, and you can always unsubscribe. Okay, so let's jump into our first investor, Shark Tank's Kevin O'Leary. Here he is talking about crypto in 2013.
It's been a roller coaster ride for Bitcoin. Yesterday, you'll know it lost 60% of its value. Kevin O'Leary is our business commentator and the chair of O'Leary Funds. We know he has a thought or two on that. Nice to see you in studio again this morning.
So I think the best way to look at this is a proxy for the mistrust individuals have of central bankers. If you're willing to take Bitcoin as a currency, a virtual Barbie currency to me, it has no basis, no central banker, no hard asset behind it. But if you don't trust any other currency, this is where you go. So I ignore everything till it gets to $1 billion of market cap.
Okay.
That happened recently with Bitcoin, well over $1 billion in value. So it's here to stay. When you've accumulated a virtual worth of $1 billion and people are willing to trade it and actually buy things with it, turn it back into hard assets. And here's the key, Heather. Owners of hard assets are willing to take Bitcoin. This is here to stay.
Is it a legitimate form of currency to trade?
It is. It's going to grow, but it's going to take a long time. But the key is volatility. Nobody's going to put a large part of their net worth into this thing because it can go up and down 60% in a day, as we saw yesterday. But is it here to stay? Oh, yeah. So will I take 2 or 3% in Bitcoins? I think I might. I'm going to start looking at it.
So, as you can see, even after Bitcoin's 60% crash, Kevin still seemed optimistic about the investment. And even though at that point in time it was still super early in the game, he seemed well aware of its hedging potential and even spoke about adding 2 to 3% of Bitcoin to his portfolio. But 6 years later, in this 2019 CNBC conversation with Anthony Pompliano, it seemed to be a completely different story.
Again, it's just supply and demand. If you have a scarce asset and demand increases, Mr. Wonderful thinks it's worthless.
Well, I
called it garbage this morning.
I did say that. I want to explore the idea that there's nothing here except raw speculation. Mm-hmm. No different than when I go to Las Vegas and put my money on black or red on a roulette wheel, because where is the intrinsic value inherent in deploying real capital? Let's talk real money here, and putting it into Bitcoin as a storage of value. I get gold. Tell me why this, which is basically a digital game, that's the way I look at it, has any intrinsic value. When people actually put real money into this, they make no interest, they can't pay their taxes with it, the regulators don't like it, which is always a problem for compliance. And where's the long-term value? Just this idea that they're going to cut the number of units in half, such a scam. Like, that's just totally BS.
What you've got to realize is with Bitcoin specifically, money is a belief system. So the US dollar, the only reason why you and I use it is because we believe it has value. So if I give you $1, you give me a good or service in exchange. Right. We believe that it has value. Bitcoin has value because two people who exchange it believe it has that value.
I taught a class at Harvard 18 months ago that young people in that class challenged me. I put $100 into something called Coinbase, which is a wallet thing. And
You buy Bitcoin?
I bought them all. I bought all the crypto crap. I put $100 in. It's now worth 30.
30.
That's a 70% loss on my crypto crap. Now, I bought them all. I think that really sucks.
Do we hit the past highs again?
I definitely think that we will, right? Again, it's
What sort of time frame?
Look, that's the hard part. The way that I think to look at this, it's a non-correlated asymmetric return asset. And we definitely, in my opinion, we've hit the bottom of the bear market. We've now entered into this bull market. Historically, about a year out from that halvening period is when that kicks off. It wouldn't surprise me if we enter kind of a 2 to 3 year bull market now. And 20,000, I think, will be a blip on the radar, just like previous past highs
This
were.
is only Bitcoin.
Only Bitcoin.
No other crypto crap.
I'm not here to talk about anything else but Bitcoin.
It seems you would think that if it's all boats would rise in this tide of crypto.
So for your portfolio, here's the number one thing I can tell you as to why you should own Bitcoin. It's a non-correlated asymmetric return asset that the value drivers of all of your equities, everything else is tied to earnings, GDP, interest rates, et
The
cetera.
problem is that Bitcoin's not tied to anything.
Well, neither is U.S. dollars, and how big is your cash position?
You know, I look, I love your optimistic view of it. You haven't changed my mind at all. It's still garbage, and I'm not going to take real money and put it into this thing. It's never going to happen.
Now, in that last clip, Kevin went as far as to call cryptocurrency garbage. But fast forward to a conversation Anthony and Kevin had just a few months ago, and it's changed again.
You and I had some epic showdowns on television, but I think that there's a lot of changes that have happened in the market, both from a regulatory standpoint and also some of the market dynamics. And you now are comfortable starting to allocate to it. So maybe walk us through kind of what changed and then how you're thinking about allocating to Bitcoin and cryptocurrencies today.
Yeah, so what changed is exactly what you said, Pomp, the regulatory environment. But I point out that when things change, I change. That's when I took my first Bitcoin Ethereum positions in 2017. Obviously, I've done very well with those.
What's the current allocation percentage? I think at one point we talked and you said you were at 3%. Are you still at 3%?
No, I've told everybody, I've disclosed that by the end of the year, I'll probably be at 7%. That's the target. Because I've gone beyond Ethereum and Bitcoin. And it could go as high as 20 if I wanted to, but I'm just taking it one step at a time.
What would it need to take, or what would have to happen for you to go from the 7% target today to 20%?
Performance.
Now, since that conversation, Kevin has come out and said that while his allocation target has stayed at 7%, due to the appreciation seen over the last few months, his crypto assets now take up almost 10% of his portfolio. But that's besides the point. Clearly, something has changed in the mind of Mr. Wonderful that has caused such a massive turnaround in sentiment. Now, I have nothing to back up the following claim, but I'm just going to put it out there. In my opinion, Kevin would probably be described as having a pretty big ego in comparison to the average person. And in both the second and the third clip, he mentions being challenged to buy crypto in late 2017. And as of the 2019 clip, those holdings were at a 70% loss. Now, most people in that situation, without a sound long-term belief in the investment, would struggle to not be upset. And so I could imagine for someone with an ego as big as Kevin's, as well as the fact that investing is his thing, having a 70% loss would most likely be contributing at least a little bit to his heightened skepticism in that second clip. And so given since then he's added more to his crypto portfolio and that's done better, that could explain his heightened optimism in the last clip. Now, other than that, from the last clip, it is clear that he's more knowledgeable about the topic, and from what he says, having financial regulators warm to the idea of crypto has probably made crypto a more attractive investment for him. Now, moving on to someone who's a little less well known when it comes to the mainstream media, but very well known here on YouTube, we're talking about the founding father of personal finance on YouTube, Stephan. And like Kevin, in 2019, he was not a fan of crypto.
And the reason why is, for me personally, not investing, like I don't need to take the risk. It's not going to make any difference for me. If it goes up to 500 grand, that's not going to make any difference in my life whatsoever. If it goes down to, $10,000, I'm just going to be upset. So why take the risk? Why would I need to make any risky investment when I don't need to? I am more concerned right now about capital preservation at this point. I don't want to lose what I have. I want to play it a lot safer. I want to invest in real estate. If I was really trying to get it, try to make it big and try to make some big moves and make some big, I would have to put in $1 million in Bitcoin for it to make a difference. If it goes up, if it quadruples in value, absolutely, making $3 million, that's life-changing money. But You know, to put in a negligible amount is not going to make a difference to me, unless, of course, maybe joke's on me in like 5 years we look back at this video and Bitcoin went from 10,000 to like 200,000. Then you know what? Okay, fine, joke's on me.
However, as of 2021, Graham also seems to have changed his tune.
We're almost done, but my investment portfolio would not be complete without a few final options, and that would include cryptocurrency. Throughout the last decade, a small allocation to Bitcoin has been shown to be a successful hedge against your portfolio, and it's a way to diversify into a new asset class that isn't correlated with anything. For me, I just decided that I would rather have the 1% chance and be in it than take the 1% risk and miss out. Although something happened after I made that initial investment. The more I began researching cryptocurrency, the more potential I began to see, and the more money I started investing. What started as 1% quickly became 3%, which soon became 5%, and now my goal is to have 8% of my portfolio between Bitcoin and Ethereum by the end of the year. Currently, I have about $1 million invested here, and there's really not a lot of strategy into doing this. I just buy Bitcoin and Ethereum on a regular basis, and that's pretty much it.
Now, I won't echo his reasoning as he summed it up quite well in the video, but other than an apparent adjustment in Graham's risk tolerance, he seems to be more confident in his understanding of the asset, and as he says, he is finding comfort in the mass adoption of Bitcoin. And moving on to a couple of guys who, from the intro of this video, you'll know do not have a very optimistic view of crypto. Here is Warren Buffett and Charlie Munger on crypto.
People say, well, I'll sell you goods in Bitcoins, but they change the price of those every time the price of the dollar changes in relation to Bitcoin. They're pricing off the dollar. They could say, well, I'll sell it to you in barrels of oil, but if they every time the price of oil changes, they change the number of barrels you have to have. That's not, your oil is not the currency.
People say, oh, it might be the next big thing. What do you think?
I think it's rat poison. Put him down as undecided. In terms of cryptocurrencies generally, I can say almost with certainty that they will come to a bad ending.
Capitalization of cryptocurrencies approached that of Berkshire and Apple last year. And clearly, the idea behind crypto will affect conventional banking groups where Berkshire is a shareholder. You always say you didn't go into too much detail to obtain an understanding on cryptocurrencies. So what factors caused you to say that it's a bubble?
If you had bought gold at the time of Christ, and you figure the compound rate on it, you know, it may be a couple tenths of 1%. It essentially is not going to deliver anything other than supposed scarcity, you know, because you can only mine so many. But so what? I mean, what does it produce itself? I think that anytime you buy a non-productive asset, you are counting on somebody else later on to buy a non-productive asset because they think they can sell it to somebody for more money. And it's been tried with tulips, and it's been tried with various things over time, and it does come to a bad ending. Charlie?
Well, I like cryptocurrencies a lot less than you do. And so, to me, it's just dementia. And I think the people who are professional traders that go into trading cryptocurrencies, it's just disgusting. It's like somebody else is trading turds and you decide I can't be left out.
I'll ask this very fleetingly. Has your position changed on Bitcoin?
No, I mean, it's too bad, but Bitcoin, it's ingenious, and blockchain is important, but Bitcoin has no unique value at all. It doesn't produce anything. You can stare at it all day and no little Bitcoins come out or anything like that. It's a delusion, basically.
I do think that a properly run bank is a great contributor to civilization, and that the central banks of the world like controlling their own banking system and their own money supplies. So I don't think Bitcoin is going to end up the medium of exchange for the world. It's too volatile to serve well as a medium of exchange. And it's really kind of an artificial substitute for gold. And since I never buy any gold, I never buy any Bitcoin.
Now I know, Warren and Charlie's opinions are definitely not popular amongst today's investors. And while some of you crypto experts out there may be able to pass off some of their opinions as misinformed or behind the times, I would say that to disregard everything Warren and Charlie say here, you would be at risk of throwing the baby out with the bathwater. Because as Charlie himself would say, don't allow yourself to have an opinion on something unless you can state the arguments against your position better than your opponents. So basically what he's saying here is there's no point in straw manning someone else's argument against your own. You need to be able to understand and provide the best case against your own in order to fully understand your own opinion. And with that being said, given the overwhelming optimism in the market right now for cryptocurrency, we won't be looking over the really optimistic opinions here in this video, but I'll definitely put some links to those in the description below. And with that, if you enjoyed this video, we would appreciate a really quick tapping of the like button. And if you want to see more, here's a video that YouTube thinks you'll enjoy, and this is our latest video. Hopefully one of those appeal to you, but if not, I'll see you in the next one.